Let's get a better understanding of this situation emerging in the United States and how it is impacting the startup ecosystem here in India as well. Editor Banking BQ Prime, Vishwanath Nair, is now joining us with more inputs and perspective into this. Many thanks, Vishwanath. First of all, can you help us understand after the SVB collapse, we've seen two other banks seeing jitters as well. Are these all linked, and what led to the collapse of SVB?
Thank you so much for having me. The question here is whether these three bank failures are linked with each other. Well, they are in some ways and not in others. It's not like one led to the other, but there is a broader rise in interest rates in the United States, which has led to some depositors pulling funds, which has also led to the investment portfolio at Silicon Valley Bank and a few others. What we understand is a few other banks in the US also have a lot of investments in their investment book, which are getting affected by this interest rate change. Now, everything would have been fine if people were not pulling money out, because this was only a mark-to-market or a sort of an assumed loss on their investment book. The minute people start pulling money out, then the bank has to ensure that it has enough liquidity to pay its depositors. And that sort of led to the fall in all of these three banks. That's what we're seeing at this point in time.
So, Vishwanath, is there concern now that since it's impacted three banks now, others could also go bust? Is there a real concern here?
There is. So, at this stage, the United States regulatory mechanism as well as the government is firmly behind these bank closures. They are assuring depositors, they're providing any kind of emergency liquidity that these banks will need to pay off their depositors. So to that effect, there is really no concern of any future failures. However, interest rates continue to remain high, and we do know that there are other banks which have unrealized losses on their books. So if this panic situation continues and people start pulling out their money in droves, or what is popularly known as a bank run, if that continues for a very long time, then you may see some impact on the banks in the US, and that's what you're seeing in the stocks, not just in the US but across the world. Everybody is afraid with respect to the financial stocks.
So what have the regulators done so far to prevent the situation from getting aggravated?
So as far as the United States regulatory mechanism is concerned, they, on Friday, very quickly after it became apparent that there was a problem with Silicon Valley Bank, they immediately took control of the bank. They removed the management and they put it under receivership, which essentially means that it cannot operate unless the government says so. So that was done to begin with. By Monday, all the depositors had access to their full funds. The regulators have also put up a $25 billion backstop, which is to say that if the bank falls short of money when paying back its depositors, it can rely on the Federal Reserve to access that money and give out that money back to the depositors if they need it. These measures are already there. There is also a Federal Reserve investigation into the matter. The United States President, Joe Biden, has already said that that he is going to take the people who have messed up in the situation. They're going to be taken to task. So to that effect, there has been a lot done as far as this bank collapse is concerned.
So, Vishwanath, what you're saying is that the depositors, they have been reassured that their money is safe and that they'll be able to withdraw their money as well if they require to do so. What about the investors?
Yeah, so what typically happens in bank failures is that equity investors, and equity is sort of capital that is risky capital. It's meant to take risk, and if your risk pays off, you get a good reward. If your risk doesn't pay off, then you lose that money. That's the core of equity capital. So as far as investors are concerned, the government has not given any kind of window or any support system as far as these investors are concerned. However, we do know that a case has been filed by a certain shareholder group against SVB Bank, which claims that there was some kind of fraud involved, and therefore they are challenging this failure in courts.
Vishwanath, I understand that some of the startups in India, they have in fact said this morning that they were able to access their money in SVB. But by and large, what kind of impact have we seen in the startup ecosystem in India? And is it giving, the startup ecosystem some sort of jitters? Are they looking at other options now? What does it look like?
Definitely, because on Friday, when the receivership happened, essentially all payments and all payouts were blocked till Monday, which is when these things were opened back up. So for those 2 or 3 days, these companies were not able to transfer funds. Remember that SVB was a big payroll bank, essentially a bank that ensures that the employer is able to pay its employees, and it worked with a lot of startups. So if the bank was shut, then obviously those startups were not able to pay their employees. They were not able to pay the merchants who they work with for their business. So all of that money got stuck for those 2 or 3 days. Things seem to have been normalizing over the last couple of days with the payments being opened up again. Indian startups, as far as they're concerned, there were a few. For example, Nazara Technologies was one company that came out in public and said that about 64 crore rupees worth of deposits they had with Silicon Valley Bank. It's not just the company, but also subsidiaries. So for companies like that, a lot of Indian banks have opened facilities with Gift City, which is an international finance center. So rules apply slightly differently there versus, say, a domestic bank here. So these windows have been opened up. In fact, we've also seen the government stepping in. The government is directly talking to startups, and they're trying to figure out ways how they can ease the situation at these startups so they can continue their operations normally.
Vishwanath, you pointed out that despite reassurances coming in from none less than the US President himself, the bank shares globally are seeing tremors across Asia and Europe. They've slumped. What more can be done to reassure the banking sector?
Honestly, at this point in time, it's mostly the public has to soothe itself out. It's a matter of panic, and the government has done what it could do in this situation. There's really nothing more that the government can do apart from ensuring that all depositors have access to their money. So as long as this fear continues amongst depositors, you will see some people going out and withdrawing money, but that seems to be abating. People are coming back to the realization that the banking system is starting to look more safer in the US. In India, we have not seen that happen at all. There has been no impact on any bank in India as such. Stocks may change, but fundamentally in the companies, nothing has changed.
So when experts say that the Indian banking system is resilient, do we take it at face value?
Well, we can at this point in time because the Reserve Bank of India is very, very stringent when it comes to supervisory efforts. It has ramped up the way it looks into bank balance sheets, the way it looks into non-bank finance companies' balance sheets. The RBI's effort has always been to avoid any kind of contagion effect. So one entity fails and that spreads across various other entities. So they're trying to avoid that kind of a situation, which they have been able to do successfully so far. And there's no reason to believe that anything on that front is changing.
Vishwanath Nair, thanks for joining us with all those inputs and a perspective into how we should be viewing this collapse of US banks that we are at the moment that's impacting the Indian startup ecosystem as well.